Welcome to the Money and Mortgages podcast. I'm your host, Adam Coleman, accredited financial counselor and mortgage planner. Join me as I speak with fellow industry experts on all things personal finance. Welcome, everyone. This is your host, Adam Coleman. And with me today, I have Pam Friedman. She's a certified financial planner in Austin, Texas. And today we're going to be talking all about windfalls. So any of the financial planning considerations of receiving a large lump sum of money. So Pam, it's great to have you on the show. Thanks for being here.
Thanks for having me, Adam.
Absolutely. Well, I guess before we jump in, maybe tell us a little bit about yourself and your background before we jump more into windfall discussions.
So I've been a financial planner for quite a while now, about 13 years. Before that, I was teaching at the University of Texas, and before that, I was an investment banker in New York City. And all that has led to me working with people who do end up with a windfall, either through, for me, divorce or widowhood. So let's just jump in and talk about what a windfall is. People come into my office and they suddenly are responsible for money. And that is a type of windfall. I think when most people think of windfall, your brain immediately goes to like a lottery win, right?
Right.
You're thinking, I won the lottery. I didn't know I was going, that's probably the real definition of windfall. It's, an unanticipated kind of sudden money event. But in reality, or the way I think about it, it's usually somewhat anticipated. It comes from some kind of transition. You suddenly get a larger bonus than you expected. There's a death in the family, either parents or a spouse, so widowhood. Divorce, where you're suddenly responsible for money. You release that responsibility to your spouse. And for a lot of women, not always the woman, she's never really taken responsibility for that, didn't know how it was invested, maybe knew what the budget was, but didn't necessarily know what retirement would look like or any of those kinds of things. So I associate windfalls as the unanticipated responsibility for money. So I define it a little bit differently.
I guess I know the answer is obviously going to be different, but how does it change between more of a planned windfall that you're talking about in the situation of a divorce where you might have months, if years, to kind of plan that out versus a sudden, unexpected increase of lump sum of money right away?
Yeah, I mean, it's a bit easier if you have some time to plan.
Right.
Because by then you've met a financial advisor, you have a trusted person in your life you can discuss financial issues with. Sadly, I mean, you hear these stories online all the time in newspapers where someone wins the lottery and, they do all these things and they're back where they started, they're bankrupt because they just didn't plan out how they were going to use that money. If you already have a trusted advisor, if you already have a financial education, and let me suggest a couple of things. I think everyone should be better prepared financially because bonuses do happen. Death and divorces happen. I mean, especially if you're in your 40s or 50s where something might happen to your parents, you really should be better financially prepared. Susan Bradley has a really good book called Sudden Money, where she talks about the various transitions you go through, because at the same time you're suddenly responsible for money, and this is true about divorce or widowhood, you're also dealing with the emotional issues and the change of identity that you might be going through, and you're not really all there. You've got some brain fog going on. So having that financial education, having a trusted advisor already in place. There's another book I like called Exceptional Wealth. So anything over $1 million is what Mark Tepper calls exceptional wealth, and how it's typically managed and what that means, and talking it through with a financial advisor before you make any big decision.
And that brings up another question is, a lot of people, I would say there's still a lot of financial professionals out there that kind of prey upon that situation. So is there any advice high level for what to avoid when trying to get that trusted financial advice, kind of sifting through all the noise that's out there with where you should go, where you should put your money, things like that?
Yeah, I mean, sadly, that's what's out there. And so having some knowledge about how the financial industry works is probably a good idea too, and getting that ahead of time. Looking for someone who's a certified financial planner, a financial professional. So a CFP is really important. Are you a CFP? Are you a planning professional? I think, why would you use anyone who didn't have that background? And if it's not that, what's your experience? What do you focus on? How much do you charge? What are the fees? I'd be really careful out there. I think annuities and annuity salespeople are not always the most knowledgeable people. Sometimes they really come from the sales side. So
Right.
be very careful about understanding not all annuities are bad. And sometimes they're appropriate. But if you don't understand it, don't invest in it. If it's not simple
Right.
enough for you to understand, please, be really careful about purchasing an annuity. Annuity really does lock you up for several years. The money is now not liquid to you anymore, meaning that it can't easily be converted to cash you need to spend. So without additional fees, there's things called surrender charges. So that can really put people in a bad position. If you're getting divorced, of course, I'm going to give out a shout out to my fellow certified divorce financial analysts. It's where I focus. If you're getting divorced and that's suddenly, and that can happen very suddenly. I mean,
Right.
people can get fired from their marriage. One partner has thought about this for a year and then suddenly announces it, and the other person needs time to catch up. It's advanced financial planning. You're going to be thrown into getting an MBA while you're brain foggy, while you're trying to deal with the emotional issues, while you're in these transitions that are going to go up and down, and you've got
Right.
the kids and all these other things. Of course, I'm going to shout out for my book, Financially Fit Divorce. This is a simple way to organize your thoughts around the money in a divorce. So I'll give a shout out to my own book.
Nice. Good for you.
Yeah.
We'll take the divorce case and then possibly like widowhood, inheritance, things like that. Like, what are kind of the first steps that somebody should really take when they're considering what to do with that, just so that they avoid some of the pitfalls that obviously a
Yeah.
lot of people fall into?
Yeah, on the widowhood side, I don't do anything without working with an estate planning attorney. We've got to
Right.
find where the estate planning and documents are. And sometimes the lead up to widowhood, where's the power of attorney? Do we need to exercise that because someone's incapacitated? So working with a financial advisor can be the person who quarterbacks the process, who helps you identify where the documents are. Hopefully people are more organized these days and they know what the risks are of not having a will, not having an estate plan. But talking to an estate planner, do we need to go through probate? What were the other plans that were made? Sometimes this is done in an extremely emotional time, around the time someone is in the process of potentially dying or has already, suddenly died. A lot of things can happen that were unanticipated if there isn't a plan already in place for that. But a financial advisor can play the quarterback role and get you the right people, what the right documents are so that you can move forward and know what's there. It's the whole probate process and the process of getting all those assets under your control.
Right.
You're going to hire a realtor. You're going to try to figure out what you're going to do with the house. There's going to be other things to do, and a financial advisor can quarterback that for a person. On the divorce side, find a certified divorce financial analyst, maybe even before you find an attorney. If the issues are primarily financial, I think that's the right person. Start with the person who's got the answers to your biggest questions. Get
Right.
organized before you see an attorney, because an attorney is charging hourly. They're very, very expensive. You want to go in there prepared. You can't split what you don't list. You want to list what all the financial assets are of the family, at least the ones you know about, and work with the CDFA to do that. Start talking about where there's going to be contention. Maybe both parties want to live in the house. How are we going to work that out? We're going to try to figure all that out before you see an attorney so that your time with the attorney is super productive. And that's what you want. And that's really the role I play. I work with people as a CDFA before divorce. They find me, we help them find the right attorney for their case. During the process, attorneys will bring me on for specific analysis or just to help the clients and support what they're trying to do. And certainly work with a lot of people post-divorce because issues come up afterwards. Things were not clear in the agreement. We may even have to go back to the attorney to work things out, but getting the assets divided, the accounts divided, and people need help with that. So a
Right.
certified divorce financial analyst is what that's called.
Right. One thing I hear a lot is, and it depends on how the lump sum works out, especially in divorce or inheritance. But one thing I hear a lot of people say is like, don't do anything with it for X number of months, kind of get your head wrapped around it. Obviously, like you said, get out of that fog that you might be in. Do you kind of prescribe to that? Is there some truth to kind of settling down, leaving it just in whatever account that you want to leave it in, just something safe and not messing around with it? Or do you think you need to get jump started on and start planning a little faster in the process?
Well, I think the mistake is really not having somebody knowledgeable, right?
Right.
To help you think through what you're going to do. Oftentimes, or sometimes, people will get this sudden money and they want to go buy the Bentley, right? It's a typical
Right.
story because that's where your brain goes. They want to keep up with the Joneses. They want the bigger house. They just want all these things, but they're not doing the planning that's required. So before they do that, they think, oh, I'll just go find a financial advisor and figure it out first. Well, if you didn't know that financial advisor before, are they really a trusted person? Hopefully
Right.
at least you're talking to somebody who a friend recommended so they can be a little bit more trusted. But the success really is in having a trusted financial advisor before all these events happen, which is why we always recommend that people meet a CFP, get some understanding of what their own financial life is about before these events might occur. I tell people on the divorce side, because I do most of my work on that side, is preparing financially for a divorce doesn't mean you're going to get divorced. If anything,
Right.
it probably means the opposite, because you're going to catch up on your financial life. You're going to, understand it. And assuming that you're in a good enough relationship, I think it makes the relationship stronger. The transparency is the understanding. Not understanding is really lack of knowledge, or lack of understanding is really what causes the financial friction between spouses. So
Right.
you can prepare however you want to prepare, hopefully before you're even thinking about divorce, saying, gosh, what would happen if it's not just divorce or widowhood? What would happen if my spouse died? Do we need life insurance? Should that be in place? Where are all the assets? How are we investing them? If you don't know that right now, it's time for you and your spouse to go find a financial planner and start that process and begin that
Right.
trusted relationship. It's really going to be valuable in the long run.
Yeah, no, at least having somebody to go to when these things do arise, because there's always going to be something that pops up, and having somebody in your corner that knows the ins and outs of this is certainly going to be advantageous for almost everybody at this stage. So, and you mentioned obviously not buying the Bentley is a good plan. Do you prescribe to any sort of idea that you want to save a certain percentage? Do you give people kind of the allotment? And I'm thinking more along the lines of like a bonus situation, not necessarily a divorce, because that's going to throw everything into chaos with budgets and things like that. But if you're pretty well set on your budget, you get a big lump sum. How do you typically advise? Do you spend a portion of it? Do you let them have some fun money? Do you then allocate a certain percentage towards some other goals? What does that look like for you?
Yeah, I mean, that's a conversation and it's different with every client, as you know. But seeing it from a third party and more objectively, I'm going to talk about debt first. Like, where are
Right.
you debt wise? What's the cost of that debt? And I have people who are really extreme on these things. They've got a 2% mortgage and they're saying, well, I want to pay off the mortgage. And we're going to have a
Right.
conversation. Maybe it's worth keeping it somewhere else, letting it grow, having the liquidity, the ability to quickly convert it to the cash you might want for something you might want to do, keeping it on that side rather than paying off the mortgage. It's surprising me people get very conservative. They're like, well, I'm just going to pay off the mortgage. But
Right.
certainly credit cards, any kind of
Yeah.
credit line, HELOCs, we're going to talk about whether it's worth and how much it's worth paying some of those down, especially where rates are on HELOCs right now. It might be worth considering paying stuff and things like that down. Where rates are with credit cards, certainly paying down credit cards. So what I do is go through an exercise where we're creating a family balance sheet. What are
Hmm.
your assets? What do you own? What are your liabilities? What do you owe? And strategically going through each of those and saying, hey, where can we most effectively deploy this money? And certainly go have some fun, go on vacation, take the family. If there's a bonus, particularly, financial planners aren't here to stop you from spending money. It's always the client's money. And certainly you need to live your lives. I mean, I've worked with clients before where the husband was just a super saver. Everything was saved. And they had just had a baby. The baby was 1 year old. And the wife was on board with it. She's like, I love the fact that you're a super saver, but can we please go to Disneyland? Like,
Right.
we really, can we just break the bank a little bit? And there's got to be a balance. And having that conversation, I mean, there's financial therapists now that you can talk to, but even a financial advisor and a CFP we have experience with this kind of thing. And we can talk about the pros and cons of the save versus spend kind of idea.
The big one, obviously, the next kind of topic that everybody obviously has is they don't want to pay so much in taxes. So, are there really anything that people can do to try to minimize the taxes in a big lump sum windfall type of situation?
Yeah, this is also where even a CPA or a CFP can really help. These different windfalls have different tax consequences. If it's a bonus that's coming through your company, it's already been withheld for taxes in all likelihood. Depending on the type of business that you have, your W-2 employee, it would have been withheld. So it's a little less of an issue there.
Right.
But your boss tells you you're going to get $50,000 bonus, and suddenly a $30,000 check shows up, and you're like, ugh. It doesn't feel so good, but taxes are, fact of life. It's the reason why we have roads and bridges and the things that we all need
Right.
to share in, and police officers and fire departments. We need to kick that money in so that we have those things. Death and widowhood, a little bit different. If there's been proper planning, there may be less taxes than you expected. Things understanding what cost basis is, something was purchased for, that actually steps up. So usually taxes are incurred when something is sold, but selling in the case of post-death, there may not be as many taxes as you thought. There could be some transfer taxes, some other things, state taxes. There could be estate taxes if you live in certain states. Texas is not one of them, but if you live in certain states, you'd be surprised that the state is coming after part of the estates. You're going to want to sit down with the CPA and talk about what those taxes are going to be before you spend any of that windfall. And then in the case of divorce, each and every asset has a different case, but generally speaking, moving from the marital assets to the individual assets, there is no tax on transfer so long as the transfer happened incident divorce. It's in the agreement. But once you sell that asset, you assume the cost basis that was part of the marital estate, and you will pay some taxes. So that is part of the analysis we go through in a divorce case. So everyone has a different, the IRS likes to keep us confused.
Right. Which is another reason why to have a couple experts in your corner, including a financial advisor and a CPA in most cases. Well, any common pitfalls that you see from clients that you've dealt with, or other situations where you want to try to help people avoid, like what should people kind of focus on to try to do this the best way possible?
Yeah, I mean, I could go through a lot of examples because I've been doing this for a long time, where people did things that, gosh, they could have done it in a better way. In the case of divorce, I had a client who didn't have a lot of credit. And so in order for her to move out of the house, she had to rent an apartment paying 12 months in advance.
Oh,
She had the money in an inherited IRA. And so she pulled the money out of her inherited IRA to pay for it instead of the community, which really could have been used to do that. And so her separate assets were depleted instead of, she could have used marital assets to do that. So, I mean, talking to a professional about where the best place, what account is the right account to take money from is a common pitfall. Causes additional taxes, additional fees that were unanticipated. In divorce and in widowhood, pulling money from inherited IRAs, be very careful. They have penalties. You may be pulling it out too early, so there's an extra 10% penalty. You're losing the compounding, the tax-free compounding, and you're also having to pay taxes. There's a rule that attorneys promote a lot of times, and CDFAs too, that you can pull money out of a 401k, part of a 401k that you're awarded in divorce, for example, and avoid the 10% penalty. And it makes it sound to the client like, well, that's just free. There's still taxes. There's still ordinary taxes to pay.
Right.
And so being very careful about how you do that and what the steps are. There's a lot of landmines around transferring money and where the taxes come from, penalties, fees. And that's really the purpose of hiring a CFP. We know where those pitfalls are. We have the tax information, but the specifics, you'd really want a CPA.
Right. No, for sure. Well, this has been extremely helpful. Any other last bits of advice for somebody that's going through receiving a windfall at this point?
Yeah, I mean, take your time. Like you said earlier, that is good advice. Take your time, be more thoughtful and strategic. You might be going through a very emotional time as well. You're going to have to give yourself some space and time to deal with that. whether it's a divorce or a death of a spouse or death of a parent. Your brain, try to remember ahead of time, might be a little squishy while you're trying to make those decisions. So hiring the right professional can help clarify what actions and what steps you want to take first. But, still take the vacation. Go.
Right. Live a little bit with that. So enjoy the lump sum to some degree, but yeah, plan accordingly.
Plan accordingly. Yeah, it's a good thing. Someone is trying to, especially in the case of, bonus or a lottery win, or even the death of a parent or spouse, they were doing things thinking of you. They left you life insurance. They left you these assets. They wanted to take care of you, but find some help because your brain might not be there yet.
Right. Well, this has been great, Pam. If somebody wants to learn more about you and your firm, what's the best place to look?
Financiallyfitdivorce.com is the best place. PamFriedman.com will get you to the same place. So you can find me online. I'm the easiest person online to find, Pam Friedman. And the book is on Amazon as well. There's a Kindle version and an Audible version if you need those too.
Nice. Well, I'll make sure to link everything in the description. But Pam, I appreciate you taking the time.
Great. Thank you for inviting me.
Always a pleasure. All right, we'll talk to you soon.
Bye-bye.